Holy smokes, an algorithm that predicts the price of a stock into the future just predicted that Tesla could rally over 60% by Q1 2024. This is information you will only find here on this channel. Whether they are right or they are wrong, the Cybertruck is launching here soon, and I expect that will be bullish, likely very bullish, for Tesla's stock. Now, here in this video, I also want to dive a little bit deeper. I want to go over some of the risks out there with Tesla and the broader markets. I want to look at the charts. What are the important levels to break above? And I'll tell you right now, today was a very significant day for the bulls that want to see Tesla's stock continue higher. Me personally, I would love to buy the dip cheaper, but I'm not going to argue with a 60% potential increase to Tesla share price. Let's go ahead and get into all of this very critical information. If this is your first time to the channel, you've been living under a rock, or the YouTube algorithm has not blessed you yet and you are a Tesla investor, hit the like button and consider subscribing to the channel if you want to stay up to date with everything going on every day with Tesla as well as the broader markets. So this algorithm is from CoinCodex. And it says right here, an algorithm predicts Tesla's stock price to gain 60% by Q1 of 2024. This comes after Tesla's stock fell 11% last week, even after a positive Q2 earnings report, several business partnerships, and the upcoming launch of the Cybertruck. Sentiment remains bullish on the future of Tesla. But you do have to keep in mind, we are going to get Q3 delivery numbers coming out this Sunday. So that's the next biggest catalyst for Tesla stock specifically, and we will go over my expectations if you have not heard them already here in this video, and what Wall Street is currently expecting. The Tesla price prediction algorithm has forecasted positive price action for Tesla over the coming months, with a 60% move expected over the next half year. What is actually interesting here is the 5-day prediction, like 5 days from now. The prediction from this algorithm is $215.82. So it is expecting quite some downside over the next coming days. The 1-month prediction is $257.36. The 3-month prediction is $301.15. And the 6-month prediction is $390.14. Again, this algorithm says you could go as high as $500 per share if you do see a certain couple of things happen, which would obviously be good news across the board, in which we'll break it down. I'm expecting really good news coming over the next couple of months, but to some degree, some shorts covering as well. Tesla is by far the most shorted stock in the markets. It is double the amount of short. What is actually interesting here is the 5-day prediction for this algorithm actually sets the price of Tesla at $215.82 per share. So quite some downside from the levels in which we are at today. The 1-month price target is $257.36. The 3-month price target is $301.15. The 6-month price target is $390.14 per share, and the 1-year prediction is back down to $301.47 per share. But again, this algorithm does indicate you could potentially hit as high as 500. Be quiet. But again, this algorithm does predict you could hit as high as $500 per share on Tesla stock within the next 6 months or so. Even if this algorithm is half right, that would still be some impressive gains for Tesla stock. According to Rajan, the 11% fall last week has taken Tesla to a make or break price level on the weekly time frame. If it manages to hold 244 as support, then it could target higher resistance levels of 296 on its way to an all-time high. However, if it loses steam here, then it would likely fall back to historical support at either $234 per share or $229 per share before any positive moves take place. And lo and behold, Tesla's stock, you did indeed hold support at $244 per share. What's actually the most impressive from the trading day today is Tesla stock hit a low of $238.31 per share. You actually fell slightly under your 100-day moving average. As soon as that happened, the trading algorithms kicked in and retail investors started buying Tesla stock. You ended up closing at the highest point of the day at $247.82. This was almost a $10 move from the intraday low. This is a very strong bounce back, and you can even see in after hours you're up another 0.34% when the S&P and the Nasdaq themselves are basically flat in after hours. So Tesla is taking this momentum and seemingly is starting to run with it. The bottom line, Tesla's stock price may be approaching new all-time highs as Cybertruck's projected release date approaches. Tesla's adaptability in the face of reduced EV demand was commended by shareholders earlier this year as the company has successfully navigated a difficult period and continues to innovate with its products. Ford, Nissan, and GM have each sought out agreements to share Tesla's charging stations in the past year, and Musk stated during the Q2 earnings release that the company's AI autopilot will be possibly 100 times safer than a human driver. Musk also stated that the Tesla share price could rise by 5 to 10x in the future, owning the company's continued progress in terms of delivering remarkable EVs that satisfy calls for sustainable energy consumption while also innovating using artificial intelligence. For now, the CoinDex algorithm is anticipating upside over the next 6 months, during which time the Cybertruck is expected to launch. The 60% upward move that has been targeted would take Tesla to a new all-time high above the $500 mark. Now, obviously, this is one algorithm. This is not a set in stone kind of path forward for Tesla. Anything can happen. I think you guys are wise enough to understand that by now. Just because this algorithm says it's most likely Tesla hits a new all-time high within the next 6 months, is it actually? We should break this down a little further. Even if the markets do fall and you do head into a recession within the next 6 months, in which I expect, if not a recession, very close to one, overall, not a great economy, that will not matter if Tesla continues to put up impressive deliveries, impressive earnings, continues to innovate, and continues to give investors a reason to be bullish. If you look at a Meta for that example, Mark Zuckerberg's nobody's favorite person, but Meta has been holding up very well through all of this because for whatever reason, one reason or another, people like Meta stock. They think it's undervalued. They buy Meta stock for AI, for metaverse, for whatever reason it is. It does not matter. Tesla does have a lot of relation to the markets, meaning it has a high beta. If markets fall, Tesla tends to fall more. If markets rally, Tesla tends to rally more, but that beta can get disconnected. If Tesla is putting up impressive numbers, if margins, that's a big story of this, go where some analysts believe they could over the next coming quarters, Tesla stock hitting all-time highs seems very likely to me. Mix this with the Cybertruck launch. Yeah, all-time highs could be coming. Delivery estimates for Tesla are 27% for next year. I've talked about this over and over and over again, but I think it's very important for you guys to understand. Over the next year or two, what moves stocks in the relative near term, if you're talking near term being the next couple of years, in which that's kind of what I think of near term, it all comes down to what are the estimates, what do the numbers come in as? Now, the second kind of equation there on a fundamental valuation is what is the margins? Because if Tesla delivers 27% delivery growth, but they have higher margins, well, what's better? If you get 35% delivery growth and lower margins, well, they would actually net each other out. Obviously, that's not the exact calculation here, but whatever you bring to the bottom line, it's going to net itself out one way or another. Now, if Tesla beats that 27% delivery number, in which this would be the slowest growth for Tesla in the past 15 years, I'm not willing to make that bet for next year when the Cybertruck comes out. Let me know if you are down below in the comment section, but I'm not willing to bet Tesla sees the slowest growth in the next 10 or 15 years. I'm not willing to make that bet. But if Tesla can, say, do 45, 50% delivery growth next year and have increased margins, then analysts are wrong everywhere. They're not only wrong on deliveries, they're wrong on margins. That's going to mean even with today's multiple, Tesla stock could be much higher in 6 months. As I reported in the last video, Fergu, which is an analyst that rates Tesla stock a buy and has a price target of $350 for the next 12 months. So in the grand scope of things, this algorithm really not too far off of some of your bullish analysts on Tesla stock. Well, he goes on to say that Tesla's sales volume could grow 50% a year on average for the coming few years. He predicts the company will lift gross profit margins in its car business back to 25%, recovering from a decline this year that resulted from Tesla's price cuts. Gross profit margins in the second quarter were 18%. 20% is a very magical number. Let me just tell you guys right now, 20%, very magical number. Because for whatever reason, when we fell under 20, everyone said Elon broke his promise, margins would under 20, more price cuts start to come, blah, 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 blah. If you go back above 20, that's almost like the equivalent of a unprofitable company going profitable for the first time. That's how the markets are going to look at it. 20% is just a magical number for Tesla's gross auto margins. And I don't think this comes to you as a big shocker if you've been an investor in Tesla. 20% margins is what everyone is talking about. But if Tesla does grow at 50% deliveries next year and can increase their margins even to 20%, just give them 20%. As long as they don't fall next year, well, you're going to be in for some very big fundamental gains with Tesla stock. If you recovered a 25% gross auto margins, you're in for all-time highs. It's as simple as that. Now, again, coming on this Sunday, we're going to get Q3 delivery numbers. And Wall Street is Wall Street, and they have no concept of business most of the time. Well, they obviously didn't listen to Elon Musk on the last earnings call when Elon said deliveries would be down in Q3. That got right over the head. Analysts were projecting 473,000 units to be delivered for the third quarter. Now the estimates are about 2.5% lower, still about 5,000 lower than what we seen last quarter. When Elon said deliveries are going to be down, he did not mean by 5,000 units off of a all-time high. That's just not what he meant. The current estimate is 461,000 units. I think the number, based on my calculations, is going to come out around 434,000. It would not surprise me if it's in between 430 and 440. I would be quite surprised if it's higher than that, and I think anything higher than 440 is going to be very bullish. Fergu expects 438,000 deliveries. Troy Teslike, which does get a lot of cred, if you will, from analysts on Wall Street, is expecting around 440,000 deliveries. So that is one of the biggest reasons that Tesla has fallen over the past couple of days, and especially on Friday, last Friday, fell over 4%. It was because the estimates were coming down for deliveries because they were way too high to begin with. That's what happened. That's why Tesla's been falling. So I don't think when the delivery number comes in at 430 to 440, it's going to be a big shocker. Now, if it's under 430,000 units, yeah, that's going to be some downside. So there is a risk here within the next couple of days to get a big move in either direction for Tesla. But what I will tell you right now is Tesla really ran down its inventory. So this argument that a lot of your Tesla bears make that Tesla has 19 days worth of inventory, quote unquote, they can't sell all the vehicles they produce, well, that's not going to be such an issue this next upcoming quarter, as Tesla has literally ran down their inventory to nothing in most countries. Now, this is also very much a positive for fundamentals and for net margins. Now, why is this? Well, think about it like this. If Tesla actually produced 83,000 units last quarter, they sold 466,000 units. That means roughly 17,000 units were produced but not sold. So last quarter, Tesla had to realize the expense to produce 17,000 additional vehicles they did not collect revenue from. So they already spent that 17,000 Teslas worth of money to make them, essentially. Well, now in this quarter, that's already been recognized in last quarter. So this quarter, Tesla's expenses might look a little bit lower for even more revenue. That could mean a higher overall net margin and net profit, and that is one of the things I'm most bullish about heading into Tesla's earnings. And obviously the Cybertruck, I think we need more clarity before markets get too excited. We know there's 2 million pre-orders. We know Tesla's Cybertruck, if a majority of these Cybertrucks actually come through and Tesla can ramp production, the Cybertruck is going to be so successful, it's going to be ridiculous. It's going to cause a halo effect to Tesla's brand itself. It is going to be on a whole new level, okay? It is going to be like the first iPhone, and the way that people looked at you with an iPhone. Like, nobody knew what it was. They all wanted, like, to know what it was, right? They were gravitated towards it. Same's going to be true with the Cybertruck, but we need those specs. We need to know the pricing. We need to know what models are going to qualify for the government tax credit. Now, Tesla's tax credit might get reduced next year. At least that's what it says on their website. We want to hear some more clarity on that. Given the Cybertruck's going to be produced in Texas, you might get the full $7,500 tax credit coming next year as well. Certain small details can have a big impact to estimates for margins, for deliveries, for conversion rates on those 2 million pre-orders. That will be very important for Tesla stock as well. Some people do suspect we are going to get the announcement for the delivery event on October 6th, and then the delivery event could be in early November, even possibly late October. So if that happens, well, probably in for some very nice gains. But there are obviously some broader market risks out there. The S&P's chart does not look half as bullish as Tesla's chart. The S&P is under its 100-day moving average, really not even making an effort to get back to it after we have recently fell. It did bounce here, but you flushed to really the lows you've seen back here in June, and even went lower than that. So you broke into a new low. Sure, you bounced here, but this kind of seasonal period we're in is not the greatest. And I've pulled up this chart many times, so I don't want to fixate on it too much, but essentially why the 38th and the 39th week of the year, which was last year for the 38th year, and this week for the 39th year, and any given year is the worst year, it's because your fiscal year ends on the last day in September. It's a new fiscal year starts October 1st. So hedge funds, institutions, money managers are sitting here saying, hey, what's 2024 look like? Should we sell stock now and book those profits? Should we hedge out our positions? Should we buy more? Should we hold? I think it's pretty clear that 2024 probably not going to be the greatest for the economy. If you have profits in technology, it makes sense to start booking those profits. So as we get closer to the end of the week, I do expect to see downside in our markets. It's just simple as that. It usually happens every year. The end of September is really rough as you get a lot of profit taking, a lot of hedging for the new year, and just even the government shutdown on October 1st. Hundreds of thousands of employees are likely going unemployed. That's just not what we need for the economy right now. That's not helping us avoid a recession. That could be the tipping factor that could push us into a recession. And Q4 doesn't look so hot as well, with student loan repayments starting also on October 1st for a lot of borrowers out there. I believe only 15% of federal student loan borrowers signed up for the SAVE program, in which I highly recommended you guys do here on this channel. If you don't have to make your payments for a year, that's fine. Your time value of money, let the interest accrue for a little while. Your time value of all of that invested money over time is going to make you a whole heck of a lot more than the interest. But that's the reality here. There's a lot of negative things going on. The UAW strike, that is a huge, massive negative, especially for my local economy here in Michigan. It's not great. The news that Ford just announced today, and we'll get into it here in this video a little bit, is not good. So I don't have a strong bullish case for this week in the markets. October tends to be a lot stronger, but then again, you're going to get Q3 earnings in October, and estimates might be too high. So really from now until 2024, until we can get a better picture of what 2024 is going to look like, recession or not, I think the markets are going to be rocky here. They're going to be vulnerable. And I can't leave this chart out. This is Black Monday in 1987 when stocks fell 20% in a single day. The 3 days leading up to Black Monday were huge drops as well. And look at these charts. They are almost identical. That doesn't mean that they have to follow the same lines here. Obviously, the world is a lot different today than it was then. But to see a continued decline would make some sense. Even if you want to get nitty gritty here, you actually seen a bounce in 1987, which would have been today. So tomorrow, we'll see what happens. I think it depends on some of the economic data that comes out coming tomorrow. We're going to get quite a few data points and Fed speakers, but history doesn't always repeat itself, but it usually does rhyme. Even the rhyme to Black Monday could be pretty dang negative. We also, like I have said a couple times now, have some pretty big economic data coming out throughout the rest of this week. Durable goods orders on Wednesday at 8:30 a.m. is going to be massive. On Thursday, you're going to get a speech from Fed Jerome Powell. That will be at 4 p.m. We'll see if he walks back any of those bearish comments on the FOMC press conference. If he does not, well, again, it's going to show the Fed is very incompetent. You're going to get final numbers for GDP for Q2, which you're expecting upward revisions here. If you get downward revisions, well, that's not great for a recession. And then on Friday, you're going to get the most important data of this week: personal spending month over month, personal income month over month, and PCE. I've also said this before, and I'll say it again because, hey, why not? If even one more person hears this, I think that is worth repeating myself. Inflation does not matter anymore. It does not matter anymore. Okay, the Fed made it very clear they don't care if inflation goes to 2%. If the economy is still doing very well, they will not cut rates and they will raise rates further. We need to see the economy doing poorly, but maybe not so poorly we go into a recession, which is a very fine line that the Fed will not be able to navigate. And let me tell you right now, if we go into recession, the president currently will not get reelected, so you will probably see emergency rate cuts to try to bail us out of an economic downturn. Since 1900, one president and one president only has ever won a reelection during second term during a recession. The 5 others that have tried did not make it. People vote with their pocketbooks. So I think to one degree, the Fed is messing up big time, pushing us into recession. On the other hand, you're likely to get some pretty fat rate cuts when we do show signs of going into a recession. You can almost, at that point, confirm it. You get some fat rate cuts. Or if we do go into a recession, you still get some fat rate cuts, which would initially cause panic in the markets, but would then be kind of seen as a positive thing. Kind of like the Rona crash in 2020. People freaked out because the Fed came out and slashed interest rates to 0 on a Sunday. Why would they do that? It was an emergency. They felt like they needed to. The economy was about to shut down. Markets freaked out. You dropped 10% in one single day. That was a day for the history books. You got 2 market halts. I don't know if we'll ever see that in our lifetime again. That was honestly a very fearful moment if you were in the market such as myself. Like, what the heck is going on? I don't know if we'll see that again, but when the Fed cuts rates, it's not a great time to be an investor. Don't let anyone fool you. You usually see a sharp downturn. And then after that, you get a very much V-shaped recovery as investors realize the cost of capital is a lot cheaper. Refinances are coming back full steam ahead, things of that nature. So the second half of 2024, I'm a lot more bullish on, but if we crash soon, then I'll be more bullish on all of 2024. But until we do get that flush down lower, I'm not going to be that bullish on 2024. Hopefully that makes some sense. You need to see markets reset given we are going into a recession. At least the Fed is going to push us into one. And the markets finally understand that. Let's now get into a couple pieces of news here to wrap up this video. You have China retail sales for January through August on your most popular EV models, and the Model Y is still dominant with the BYD Quinn Plus right behind, but Tesla has what looks like about a 20,000 vehicle lead, so still doing pretty well there. The president of Hungary met with Elon Musk at Giga Texas today. I don't know what significance this has or what this ultimately means, but hey, it's news. Could be important, might not be. It is also becoming a more common occurrence to see Cybertrucks going home with Tesla employees. This delivery event and subsequent deliveries are coming, and they're coming very soon. Some point in the month of October, I have full confidence in that statement. Ford pauses work on a $3.5 billion battery plant in Michigan. What they say is actually crazy. They cited concerns about their ability to competitively operate the plant. Huh? Competitively operate the plant. This means Tesla just got a lot bigger of a lead here. I mean, they're already in the lead by miles, but now Ford's shutting down their plans to create this plant. Who knows if this is a bluff? This is going to affect 2,500 union jobs or potential union jobs. So it might be a bluff. You never know. But still, it's not great for the economy is really the bottom line. And finally, a poll from Charles V. Payne says, would you rather lawyers, PhDs, or successful folks with no college degrees be running the Fed? 80.2% of responders here said no college degree. 15.1% said PhDs and 4.7% said lawyers. It's pretty clear. The Fed is screwing up big time. If you guys have not noticed already, I am on Twitter. Go ahead and give Michael Tyler a follow. Appreciate it. That is going to do it for this video. That is what you guys need to know. But before we kind of wrap it up here, let me give you guys my best, worst, and base case scenario for Tesla stock. Best case scenario is obviously simple. There is no crash in the markets. Things get back to a state of relative sideways trading. No big crash happens, and Tesla stock can benefit from beating the estimates, improved margins, the launch of the Cybertruck, maybe a licensing deal of full self-driving, and we can get back to the $350, $500 range. That is definitely possible within the next 6 to 12 months. Your base case is around $350. That's what I expect from Tesla over the next 6 to 12 months. I don't want to get anyone's expectations too high. There's a possibility to go much higher than that, but $350 I think is very, very fair, even if we are in a recession 6 to 12 months from now. That would be my base case. Now, if we have another great financial crisis all over again, and Tesla meets the estimates for next year, well, Tesla's stock could easily fall back to the 150 level. This is not my base case. This is not what I'm expecting. But on a knee-jerk kind of reaction, if the Fed did come out, cut rates because the economy is not doing well, 150 definitely looks plausible. So that is going to do it for this video. Hit that like button as well as subscribe to the channel if you made it to the end of this video, as well as if you learned something, you like my perspective, or you just like to stay up to date with everything going on with the broader markets, as well as a specific focus on Tesla stock each and every single day. If you guys want to come trade with us live in real time, if you do agree with some of what I'm saying and you think there could be a crash in the markets, maybe you want to come hedge out your portfolios, not a terrible idea, hit that link down below in the description of this video. I send out notifications every time I make a trade. You can come chat with like-minded investors and individuals, and you don't have to listen to my daughters sing a song about blueberries, okay? None of that over there. That is going to do it here in this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.